Welcome back. You're still tuned into Power Breakfast. And like we were saying, it was all about earnings this weekend. So let's talk about a few of the big ones. Titan posted a good set of second quarter numbers. So Mangalam is here to bring us the fine print. Mangalam, how's it looking?
Well, the Titan numbers were solid gold, but some of the shine perhaps may not sustain going forward as well. But that's not taking away from the fact that the results were extremely good. If you just take a look at all the parameters, the company beat street estimates and its own guidance as well from the second quarter update. Revenues of 8,700 crores plus versus street expectations of just about 8,500 crores. The EBITDA a good 100 crores higher than expectations, and net profit coming in much higher than expectations as a result of that. However, the revenue beat was led by sale of gold ingots worth nearly 500 crores, and this compares with around 200 crores year on year. So that's what the revenue beat was accounted for and the EBITDA beat actually had about 2% in terms of one-time benefits coming in on inventory gains in diamond as well as custom duty benefits. So to that extent, the management believes that the margins in jewelry and watches could be anywhere between 13 to 14% as against the numbers which are seen closer to 15% in the second quarter. However, the festive season like-to-like growth has been around 18 to 19%, even though the management has refrained from giving a guidance for the third quarter on the whole on account of a higher base. And investments in the eyewear business will curtail their margins from 17% to 15% odd. But that's about just the next couple of quarters. Going forward, the way the company is looking at increasing its market share, etc., the street may perhaps like it. But the big question for Titan, however, is at near record high and at 63 times FY24 earnings. How much of this solid gold is actually in the price, and how does the street take these numbers?
All right, we're going to wait by and see how the street takes the numbers. Mangalam, thanks a lot for that. In fact, remember, we will be discussing the second quarter earnings outlook as well as, what the company is making of their own performance with Titan CFO Ashok Sonthalia at 9:45 a.m. on Bazaar Corporate Radar. So you don't want to miss that conversation and stay tuned for that. But speaking of solid numbers, State Bank of India also reported a stellar set of earnings. So Abhishek is here with the roundup of what the details look like and also what brokerages are saying about the numbers. Abhishek.
Well, Pavitra, as you mentioned, it's quite a stellar set of numbers that is coming in from SBI. The ROA or return on asset has crossed the 1% level, perhaps for the first time in the history that I have been tracking this bank. So bank reports the highest ever quarterly profit led by the fact that, loan growth has been pretty robust. A 19-quarter high in terms of loan growth, nearly about 20% YoY and about 6.6% sequentially. So foreign business growth has been pretty robust at about 31.5% YoY and about 9.1% quarter on quarter. By business, I mean both the deposits and advances taken together. So the net interest margin is one of the best that you are seeing in last 7 years, coming in at 3.32% with domestic net interest margin at about 3.55%. So the operating profit is really very strong at about 16.8% YoY and 65.5% sequentially. Sequentially, we also have the treasury portfolio which is actually impacting the operating profit, but no taking away from the fact that, stress in the balance sheet is one of the lowest that you are seeing in many years, given the fact that gross NPA ratio is one of the lowest in last 7 years, coming in at 3.5%. This compares to CLSA estimate of around 3.7%. So the net NPA ratio is below the 1% mark perhaps for the first time in last 7-8 years, and credit cost is one of the lowest that you are seeing, given the fact that it's at a mere 27 basis point. So ROE remains strong both in terms of NI and PAT. It's a huge beat on our poll. Brokerages have upgraded the earnings estimate anywhere between 10% to 15% for FY23. Back to you.
All right, Abhishek, thanks a lot for taking us through all of the highlights from SBI's performance. With that,